With the Bank of Canada announcing its first rate cut in 4 years, there was a lot of speculation that home prices would skyrocket and buyers would rush into the market. But what we've seen is a bit of an opposite effect, with listings sitting on the market for long periods of time, and in some cases prices have even dropped. Later in this video, I'm going to explore some of the reasons why this might be happening, so make sure you stick around for that. But here are some of the key numbers from the month of June 2024. The total new listings have gone up 12.3% year over year from June 2023 to June 2024, whereas the number of sales have actually gone down by 16.4% in the same time period. Additionally, the average days on market went up by 50% between June 2023 and June 2024, while the average selling price went down by 1.6%, down to roughly $1.16 million. Hey everyone, it's Jay here from Vertex Real Estate, your GTA Realtor, and in this video I'm bringing you the market update for June 2024, where I'm going to break down the market trends and analyze the numbers so that you're informed going into the market whether you're a buyer or a seller. If you want to reach out to me, I'm very easy to reach. Make sure you check out the contact information in the description down below, and make sure you follow and subscribe for more information on the Toronto real estate market. So without further ado, let's open the market report and dive right in.
So here's the market report for June 2024 published by the Toronto Regional Real Estate Board, and there's quite a bit of information on this page, but I just want to bring your attention to two of these highlighted points. Despite the Bank of Canada's rate cut at the beginning of last month, many buyers kept their home purchase decisions on hold. The market remained well supplied, resulting in a slight dip in the average selling price compared to June 2023. The Bank of Canada's rate cut last month provided some initial relief for homeowners and home buyers. However, the June sales results suggest that most home buyers will require multiple rate cuts before they move off the sidelines. This follows Ipsos polling for TRREB, which suggested that cumulative rate cuts of 100 basis points or more are required to boost home sales by any significant amount, said TRREB President Jennifer Pierce. Now, these are two of the key takeaways from this report. As I mentioned earlier, we saw a dip in the number of sales from June 2023 to June 2024 by about 16%, and we also saw a slight dip in the average selling price by about 1.6%. And this correlates exactly to what the TRREB president is saying, because if we're seeing the sales dip after a rate cut, and we're seeing the average price dip a slight amount after a rate cut as well, we can see that the buyer demand is not quite there. And as the TRREB president said, for that buyer demand to build up, buyers are going to require a few more rate cuts, maybe about 100 basis points, for that buyer confidence to come back. This has been a long time coming, because if we think back to the rate cycle of the cycle of rate cuts and rate increases, the last rate cut happened about 4 years ago, but the first rate increase happened in March 2022. And since then, we saw periodic rate increases up until fall of last year. So September, October of 2023 is when we saw the last rate increases, after which the rates were held steady until last month, when the rates were cut by 0.25%. Now, the prolonged period of rate increases really put a damper on buyers' expectations and pushed them to the sidelines because they were priced out and they just couldn't afford homes at the existing rates. And what we saw is that while there was a rate cut last month, it just isn't enough to gain that buyer confidence back. And while we can say the buyer confidence is more of a psychological thing, if we put that aside, there's also the hard fact that they just wouldn't get a pre-approval. They wouldn't be able to get approved at the existing rates, because there's also the factor of a stress test, which they couldn't qualify for either. And if they're not able to get that qualification, whether they have the confidence or not is secondary, because they just wouldn't get that pre-approval from any lender to be able to purchase a home. Because while the rates came down, the other factor we need to consider is that prices have not really come down by a significant amount. Sure, we did see a 1.6% decrease year over year last month, but that's not quite enough, because it still keeps average selling price relatively high. So what you have is a combination of a high average selling price and a significantly high interest rate. And because of that, that's going to keep most buyers out of the market, and home affordability just becomes a larger concern as a whole. And this is just home affordability. We're talking during a time when inflation is high. We're talking about a time where the cost of living is high, and affordability for just everyday goods is a concern for most Canadians. So when you have all these factors combining, most buyers are not going to have that confidence and are not going to have that faith in the market to be able to jump in and purchase a home. Now, I also want to look at the number of sales by property type to get an understanding of what the most popular homes are in the Toronto real estate market. And if we look under the detached column here, we can see that 48.1% of all total sales belong to the detached category at an average price of $1.48 million. That tells us that if half of all the total sales are coming from just the detached category, detached homes are the most popular product in the Toronto real estate market. Now, this has been the case for some time and continues to be the case even today. Now, that is the breakdown by property type. But if we look at the number of sales by price range, then that gives us another insight as well. So if we look over here, these are the number of sales above the $1 million price range. So if we just look over here on this side, $1 million to 1.25, 1.25 to 1.5, so on and so forth, all the way up to $2 million plus. And these tallies over here add up to about 3,000 sales, just over 3,000 sales out of 6,200, which tells us that half of all total sales are happening in the $1 million dollar plus price range. And that tells us that the more premium price product is also the most popular product in today's market. Another interesting chart I want to show is the sales to new listings ratio, or SNLR. Now, this is the total number of sales divided by the number of new listings, and it gives us a snapshot of what market demand is like at any given point in time. How it works is that if the number passes 1, it means that the number of sales is outpacing the number of new listings, which indicates there's an extraordinary demand because because it tells us that homes are selling faster than they're being listed. Now, if we look at this historical chart, which shows a month-by-month breakdown from January 2021 until now, we can see that this bar representing June 2024 is hovering just around the 0.3, 0.35 mark for the sales to new listings ratio. Now, this is the lowest number that the sales to new listings ratio has been, except for September and October of 2023. The difference being that in September, October 2023, the interest rate was higher, and that would explain why that ratio would be low. But in June 2024, we know that the rate cut was announced early in June, and still the sales to new listings ratio is relatively low. Now, this continues to tell us what I've been reiterating throughout this video, which is that the market demand is just not there, and this is just another metric to demonstrate that. So we've talked about the sales to new listings ratio, we've talked about interest rates, we've talked about demand, but how do all of these factors affect the average price, which continues to be one of the biggest question marks for buyers and sellers today, as it directly correlates to affordability. Now, if we take a step back, we've already established that we did see a drop in the year-to-year average price from June 2023 to June 2024 by about 1.6%. But if we look at the year-to-date number from January 2024 until now, we can see that the average price is trending upwards as indicated by this line over here. Now, of course, we did see a June rate cut happen. We didn't really see an impact on the demand or the price significantly, but we are expecting the Bank of Canada to make further rate cuts later during the year, as they indicated last month. And if that does indeed happen, we'll have to see how that affects the price, because historically speaking, when rates have been reduced, that has seen a drive up in, we have seen an upward trend in prices. So what we'll have to see is whether this trend continues upwards if the Bank of Canada does indeed announce interest rates, and how that impacts the market. Now that we've established a few different factors affecting the June 2024 market, let's look at what the future holds and what the future outlook is according to the TRREB CEO. Despite a temporary dip in home sales due to high interest rates, we know that strong population growth is driving long-term demand for ownership and rental housing. Ontario has set the goal of 1.5 million more homes on the ground by 2031. This is only possible if all levels of government ensure actionable solutions with sustained effort, including continuing to remove red tape, avoiding financial barriers to home construction, and minimizing housing taxes and development charges, said TRREB CEO John D. McKelly. So we know that the population has been growing. We know that there's a consistent need for homes, both in terms of ownership and rental housing. And the only way that this can be accomplished to meet the growing demand is with all levels of government coming together to facilitate this and making it easier to accomplish this goal. And with that concludes an overview of the June 2024 market report. If you found this video valuable, please do give it a like. It would mean a lot to me. And if you have any further questions, make sure you reach out to me through the comments or through the contact information in the description down below. And I look forward to seeing you in the next one.